Do you agree with the Finks and the Dudleys, or do you agree with the Fed?
I would say I am more in the camp of the Fed in that I would view the rise in inflation recently as largely temporary. We call this an inflation head fake for a few reasons. I mean, first of all, the rising prices we've seen in the US has been driven by part sectors that are particularly affected by stimulus, which should wane to some extent going forward. I would expect these supply bottlenecks in the goods sector to eventually unwind. And coupled with the fact that demand should rotate from goods to services, some of the, as the economies reopen, I think some of the pressures on goods pricing will probably subside. And also there's the fact that a lot of the bounces in travel-related services, which are going through a price level adjustment as we get out of the crisis, but I don't think necessarily these price increases would be sustained. And if you look at the more underlying price pressures like rents and healthcare and so on, in the US, they remain pretty muted. And in the labor market, we're still about 8 million jobs short of where we were pre-crisis. So, of course, inflation is a risk and we should watch it, but I wouldn't be as concerned as some other commentators.
Well, that also sort of melds with what you're seeing in the bond market, too, where you did have yields move higher, US and Europe, but it didn't feel panicky. It didn't feel like any kind of taper tantrum or anything along those lines. However, as we get the transitory inflation numbers, the rest of the world and the Eurozone in some ways has a lot more catch-up potential in terms of those inflation numbers. Is the same true for yields?
Well, I think the Eurozone inflation outlook is quite different from the US. I mean, I think it's much more moderate. I mean, mind you, headline inflation in Europe will probably rise to 2.5% or so, driven by food and energy prices later this year. But I think core inflation will hover in the 1% area for different reasons. I mean, first of all, fiscal policy is much less aggressive in Europe than it is in the US. The recovery is further behind, is less advanced. And also there are some technical issues like price imputations in Europe means that inflation prices in some categories fell less during the crisis and will probably bounce back less as we get out of the crisis. And finally, the euro has been on the strong side. So I wouldn't see, I still think the ECB's main challenge is to raise inflation as opposed to anything else. So I think the picture is a bit different in Europe.